Hi there, my audit buddies. Welcome back to the Audit Sprint playlist here at Let's Talk Audit and Assurance. And you know what should happen before a good sprint? We have to do warm up. We have to flex those muscles and those joints. So if you haven't done so yet, I am inviting you to visit our lecture videos on the concepts of audit sampling. But if you're already done with that, then there's no stopping us from answering these 10 questions related to audit sampling, starting with question number 1. Which two of the following constitute sampling? Letter A, testing 100% of the items in a population. Letter B, testing less than 100% of the items in a population. Letter C, testing all items with a certain characteristic. And letter D, testing items selected randomly from the population. Now we know when the auditor decides on the extent of testing, the auditor may decide to perform 100% selection or 100% testing, which is actually letter A, and so therefore that is not sampling because it's 100% examination. The auditor may also decide to do specific selection or specific items, and that is actually letter C. Now, in the case of specific selection or specific items, while the auditor tests less than 100%, but the auditor has a set criteria or criterion for the items that will be tested. And since there is a preset criteria, that is not considered as audit sampling. That being said, the two items that will constitute sampling here is definitely letter B, testing less than 100%, and letter D, testing items selected randomly from the population. That way, any item may form part of the sample. There is no preset criteria. So the answer to this is Bravo and Delta. Moving on to question number 2, which two of the following are factors that an assurance provider should take into account when determining the sample size for a test of details? So we're looking for two factors that will have a relationship to your sample size. Letter A says the time available to complete the test. Letter B, the skill of the team member assigned to carry out the test. Letter C, a decrease in the assurance provider's assessment of the risk of material misstatement. And letter D, an increase in the level of expected misstatement. So to this, we do recall the factors that will affect our sample size, one of which, of course, is the assessment of the risk of material misstatement, which we said has a direct effect to sample size. Therefore, in the case of letter C, a decrease in the assessment of the risk of material misstatement will also decrease your sample size. Another such factor that will affect our sample size is the level of expected misstatement, which we know has a direct relationship to your sample size. So in the case of letter D, where the level of expected misstatement increases, then we also expect our sample size to increase. So the answer to this is Charlie and Delta. Moving on to question number 3, which three of the following methods would be most appropriate to use to select a sample of accounts receivable when the assurance provider is using statistical sampling? Now we know both statistical and non-statistical are acceptable. The moment the auditor uses statistical sampling, the auditor will have to quantify or measure sampling risk. And by virtue of this, the auditor is only allowed to make use of probabilistic sample selection techniques. So in a way, when we assess the choices here, we will be finding those techniques which are probabilistic. Okay, so letter A, for example, says random selection. Letter B, systematic selection. Letter C, haphazard selection. And letter D, monetary unit selection. And of the three, only one is non-probabilistic, and that is haphazard selection. So random selection, where each item in the population has an equal chance of being selected. Systematic selection, where the auditor chooses a sampling unit for every nth item. And systematic selection will, of course, require us to compute a sampling interval, which the formula would, of course, be the population size divided by the sample size. So this sampling interval will lead us to the sampling unit to form part of our sample. That is also a probabilistic sample selection technique. And to complete the three, we have monetary unit selection, otherwise called probability proportional to size sampling. Now, haphazard selection, whereby the auditor chooses sampling units with no regard or with no intention to include or exclude based on certain characteristics, is considered a non non-probabilistic sample selection method and is therefore more appropriate to use when the auditor utilizes non-statistical sampling. Now, as a reminder as well, when the auditor uses non-statistical sampling, the auditor can actually make use of either probabilistic or non-probabilistic sample selection techniques. But the moment the auditor uses statistical, the auditor is stuck with probabilistic sample selection techniques only. So the answer to number three is Alpha, Bravo, and Delta. Number four, which two of the following misstatements discovered in a sample would not generally be extrapolated against the total population? This simply asks us of the five items listed here, which will not be projected, which will not need any projection. So the term to extrapolate is another way for us to imagine projecting the misstatements to the population. So we are going to choose two misstatements which would not require any projection to the population. And here are our choices. Letter A, a misposting between customer accounts, meaning to say, for example, the receivable of customer A was posted to customer B instead. Okay, but in terms of the total amount, the total balance of the entire receivables, the balance is still correct. Letter B, a misstatement in invoice value, such as, for example, an invoice that is supposed to be for 1,000 was made for only 100. Letter C, an invoice omitted in error, so an invoice that has not been recorded. Letter D, an invoice disputed by a customer, perhaps as a result of sending out monthly statements and the customer noticed a discrepancy and disputes the invoice. And letter E, a timing difference between customer records and client records, such as, for example, when the customer sent the payment by mail at a particular date and was received only by the client, say 2 or 3 weeks after. So it's a matter of a timing difference. So of the five, the two which we would not project to the entire population would be letter A, because once you think about it, if this is simply a misposting between customer accounts, then the balance of the entire population is not affected in the first place. So it will not make sense to extrapolate it to the entire population, as the entire population will not show the error. And as well as letter E, as this timing difference, once investigated and found to be in order, will not necessarily be considered a misstatement. So the answer to this is letter A and letter E. Number five, when determining a sample size for test of details, there are a number of factors which an auditor should take into account. For each of the following factors, select whether it would cause a sample size to increase or decrease. So we are reinvestigating the factors that would influence or have an effect on our sample size. Starting with the first one, the auditor's required confidence level increases. Now we know that the required confidence level bears a direct relationship, right? It bears a direct relationship to the sample size. It's kind of like saying the more certain you want to be, the more you need to test, right? So the answer to this is letter A, increase. An increase in the required confidence level increases sample size as well. Now, the second item talks about the assessed risk of material misstatement in respect of a balance has been reappraised and has increased. So this one reflects an increase in the assessed risk of material misstatement, and we know that the assessed risk of material misstatement bears a direct relationship to sample size as well. So when it has increased, sample size will also increase. And the third item talks about the stratification of the population. Now, the stratification of a population serves to reduce the variability. And once variability has been reduced, then you could already decrease the sample size. Okay, so the answers to number five are A, C, and F. Let's now go on to question number six. Which two of the following statements are correct regarding factors which influence sample size for tests of controls? So we're looking for the correct statements. Two correct statements. Letter A, an increase in the number of sampling units within the population will increase the sample size. Letter B, a decrease in the expected misstatement will decrease the sample size. Letter C, a decrease in tolerable misstatement will decrease the sample size. Or letter D, an increase in the extent to which the risk of material misstatement is reduced by the operating effectiveness of controls will increase the sample size. So let's evaluate all of our choices. Letter A simply talks about an increase in the number of sampling units within the population, and we must be able to recall that the population units have a negligible effect on the sample size. So even when the population units double or triple, it doesn't have any effect on our sample size. So the answer couldn't be letter A. Letter B says a decrease in expected misstatement will decrease sample size, and we know that the relationship between expected misstatement and the sample size is direct. So letter B is correct. When the expected misstatement decreases, the sample size also decreases. Letter C, a decrease in the tolerable misstatement will decrease the sample size. While we acknowledge that tolerable misstatements, including tolerable deviations, will definitely affect the sample size, but the relationship that they have with each other is an inverse relationship. That means if tolerable misstatement decreases, sample size must increase. So it's not letter C. Letter D, an increase in the risk to which the risk of material misstatement is reduced by the operating effectiveness of controls, or basically telling us an increase in control risk will increase sample size. And we know that the assessment of the risk of material misstatement bears a direct relationship to the sample size. Therefore, an increase in control risk will also increase the sample size in relation to the increase in the risk of material misstatement. So the answer to number 6 are Bravo and Delta. Moving on to question number 7, which of the following is a definition of an anomaly as seen from the context of audit sampling? Letter A misstatement or deviation that is demonstrably not representative of misstatements or deviations in a population. Letter B, the misstatement that the auditor expects to be present in the population. Letter C, control deviations when performing tests of controls or misstatements when performing substantive procedures. Or letter D, the maximum misstatement in the population that the auditor would be willing to accept. Now, in the case of an anomaly or an anomalous error, then the definition is most definitely letter A, because letter B is what we call expected error. Letter C, whether it's control deviations or misstatements, collectively we do call them error. And letter D would be your tolerable error. So the answer to number 7 is alpha. Number 8, for each of the following descriptions, select whether they describe monetary unit sampling, block selection, or systematic selection. So before we look at the illustrations, let's first do a quick review of what is monetary unit sampling. So monetary unit sampling uses the attribute theory, and it mainly uses the peso amount as the sampling unit. This is also sometimes called or related to probability proportional to size or value weighted selection, where we say that items with bigger balances have bigger chances of being part of the sample. Block selection, on the other hand, is when the auditor chooses a block, which is also known as a group, with heterogeneous characteristics. Take, for example, if the auditor looks at the entire period under audit and divides it into months, and each month represents a block. Notice that within a block, there are heterogeneous transactions taking place, and so therefore that is called a block selection. As compared to stratification, when we talk about stratification, while the auditor still makes use of groupings or categories, but these groupings or categories bear a similar characteristic or a homogeneous characteristic. So block selection is for heterogeneous groups, whereas stratification is for homogeneous groups. Or systematic selection. And systematic selection, of course, is the one where we will use a sampling interval. So let's take a look at our illustration starting with number 1. Pedro is auditing trade accounts receivable. Materiality is 25,000. The sample is selected on the basis of choosing the balance containing each 25,000th peso on a cumulative basis. Now, this one reflects the fact that the auditor is making use of the peso as the sampling unit, and every 25,000th peso becomes part of the sample size. And this is precisely how a monetary unit sampling or probability proportional to size or value weighted selection is done. So for the first illustration, that is alpha. Second illustration, Pablo is checking whether purchase invoices have been authorized for payment. He has selected all the November purchase invoices as his sample and has reviewed them for an authorization signature. So in this case, Pablo is definitely performing a test of control. And because Pablo has chosen only all November purchase invoices, then this is an example of a block selection. As Pablo has chosen a group with a contiguous data. By contiguous, we mean in a sequence, just like what we have here. So in the case of number 8, it's alpha, or letter A for the illustration of Pedro, and letter E for the illustration involving Pablo. Let's now take a look at question number 9. The auditor of L company has identified an unexpectedly high deviation rate when carrying out tests of controls on a sample of sales invoices. Which two of the following would be a satisfactory course of action? Number 1, extend the sample size. Number 2, replace the sample. Number 3, ignore the deviations as they only affect some of the items tested. And number 4, perform alternative substantive procedures. And our choices, of course, are a combination of one and two of these, or one or two of these courses of action. Now, in this case, because the auditor has identified an unexpectedly high deviation rate in terms of performing tests of controls, and we also remember that in terms of tests of controls, there is no explicit projection method necessary, and so therefore the auditor will have to decide on what course of action. Now, these courses of action may involve number 1, extending the sample size or increasing the sample size, thinking that perhaps when the auditor increases the sample size, thereby reducing sampling risk, they may get to see a better representation of the population. Another thing which the auditor may consider doing is expanding the test. By expanding the test, that means the auditor may perform alternative procedures related to that particular test or additional procedures. Another thing that the auditor may perform, since we're talking about test of controls here, is that the auditor may decide to already give the control risk assessment and assess it as high, which will eventually affect the extent of the substantive procedures. So in this case, the likely courses of action will be to extend the sample size and to perform alternative substantive procedures. By performing these alternative substantive procedures, this means that the auditor has determined or has assessed control risk to be high and has therefore responded through substantive tests. But do take note, another route which the auditor may take is to expand the controls testing, meaning to perform another set of tests or a different set of procedures directed towards that. Okay, so the answer to this is bravo. And we have reached the finish line of this sprint. We are now in question number 10. Which of the following sampling methods correctly describes systematic sampling? Letter A, a sampling method, which is a type of evaluated selection in which sample size, selection, and evaluation results in a conclusion in monetary amounts. But in this case, letter A is actually monetary unit sampling or probability proportional to size or value weighted selection. Letter B says a sampling method which involves having a constant sampling interval, then the starting point for testing is determined randomly. And after that random selection, the auditor chooses every nth item, right? Letter B is definitely systematic sampling. On the other hand, when we talk about letter C, a sampling method in which the auditor selects blocks of contiguous items from within the population. Again, contiguous means it's in a sequence. So letter C is block selection. So the correct answer to number 10 is bravo. And fantastic job, everyone, for reaching this finish line. And I hope to see you in our next episode here at the Audit Sprint.